All right, hey there, everybody. We made it to Friday. It is, let's see here, the 20th of August, 2021. Here in Boerne, Texas. I'm Chris Franks with Texas West Capital, and man, oh man, we've been on a roll lately, making money hand over fist. My God, what a great trading week. The dollar's continued rallying as expected, which has given us our downside targets, which price just keeps on going down through with our FX pairs. Bitcoin continually hitting our targets there, doing good stuff. It's just been absolutely wonderful week trading. So hopefully you guys have been having a great week. Who else here? We got MW. What's up? Data checking in. Yes, thank God it's Friday, man. I'm feeling it. It's been a tough week, man. I mean, tough as in just working a lot and trading a lot, man. But it's been a very, very fruitful, very productive week. Who else is showing up? Ari, what's up, man? I am doing great, MW. How about yourself? Patrick, what's up? Joe the Butcher, what's up, man? Michael Williams here as well. You made 30K this week, man. I love hearing that, MW. That's awesome, man. It was such an easy week to make money as long as you guys didn't get in your own heads. Bitcoin pulled back before this recent rally here, and all of a sudden everybody's like, oh my gosh, it's going to go dead. It's going to die. It's going to roll off a cliff, And all it did was just we had a couple of options available, and we watched it follow through as it continued breaking down, and we were just checking off boxes, not this one, and then we ended up with the one we had there, and it's just been rallying like anything, like DXY during this time. The only thing having a bit of trouble, obviously, has been stocks this week. Are they at a top or not? It's possible. But I don't know yet. We've got the Nasdaq looks more than anything else like it's topped out. But the Dow Jones especially still has potentially one more wave up, and the S&P looks like it may have one more wave up as well. So what could happen is the Nasdaq could be topped, and the other two could be finishing up just one more slightly higher all-time high. And so you get that divergence in indexes, and I've talked about it before. And often at the top, at these macro tops, you'll get a divergence in your indexes. So you'll have one or, a couple of them that go, that are topped out, and a couple others that continue higher, just a little bit higher. And that divergence usually marks the top. But you've got to remember, guys, your indexes depend on what's in them. And NASDAQ is very technology heavy. So if you've got some of your technology stocks not doing so well, it's going to drag that down. Your Dow Jones, on the other hand, is the other side. It's much more diverse. If tech's having a bad week or something, transports and, whatever else may be having a good week. And so that kind of offsets it with the Dow Jones. And the S&P is also somewhat tech heavy, but nowhere near as much as NASDAQ. So it's kind of like that in between. But then you can look at the Russell and everything else. And so, you just want to look for that divergence if we get it. Which may suggest that. Let's see here. Who else is here? Devin's here. Asymrisk is here. MW, you said that 30K is all from learning what I'm teaching you. Well, man, you know what? I appreciate that, but I can't take that kind of credit, man. Guys, you got to understand, your trading's on you guys. Whether it turns out good or not, it's on you. I'm just a guy that does a thing, man. And I help you guys hopefully understand the market a little bit better. But at the end of the day, it's you guys who take your trades. So if you do exceptionally well, man, I don't know, man. For me, it's like pat yourself on the back. You did a great job, So, and if you have some issues with it, look back and figure out why are you having the issues? Where are your problems coming from? Most of the time, the problems you have with your trading is going to come just from yourself, your emotions and your psychology, guys. It's going to be this. You still haven't made that move. Everybody that comes into trading, guys, they come into trading because they think, oh, I'm going to get rich overnight. It's easy. I can do it because I can get access. So that means I know what I'm doing. And the market's going to work in this way. I think it's going to work. And for most people, well over 90% of new traders that come in, they all think the exact same way. And they think the market works the exact same way. And so that's why I always tell you guys, you're not special in that way. And that's good. I know in this day and time where everybody wants to be special, I say you're not special. You're like, oh, but seriously, you don't want to be special in this aspect. It's the good thing is, because you're not special, because you're doing what everybody else does, that means you can forgive yourself for the mistakes that you make and you can move on. You have to learn to forgive yourselves to move on, guys, because if you can't in trading, you'll never be able to get anywhere. You cannot be a victim. We've talked about this lots of times before. In life, if you're a victim in life, it's going to make it hard to be, if in your mind you're a victim in life, it's going to be hard to make a consistent profit in trading, because you're always going to blame any mistakes that happen, any bad trades. You're going to blame it on somebody else other than yourself. It's always Wall Street. It's always the whales. It's always somebody manipulating it. It's always everybody but you. And you're wrong. It's always you. Okay? And so I say that so that way you guys can get a grasp of this, get a hold of this and understand, so that way you start looking at it and you like I say, guys, whether you believe you can or you can't in life with anything, you are right. Your brain, it holds you back. Your subconscious. If you tell yourself that you can't do something, you won't be able to do it. If you tell yourself you can, you've got a lot greater chance of being able to. But like I said, as long as you tell yourself you can't, you will not be able to do it. That's how strong your subconscious is. It's all about trader psychology here, guys, okay? It's all about understanding who you are and who everybody else is as traders. Because if you can do that, it puts you eons ahead of everybody else. I didn't say elons. I said eons ahead of everybody else as far as your trading goes, which means you have a lot more likelihood of being successful. And at the end of the day, that's what you want, guys, okay? So, let me see. Who else is here? Real quick here. Let's see. Devin, I think I said hi, but I'm going to say hello to you again, my friend. Kimosabi, what's up, buddy? I see you checking in. Asim Risk says that I helped clear the fog off their glasses. Yeah, well, I'll take that. I can do that. Am I going to talk about Ethereum today? What do you mean? What do you want me to talk about it? Michael Williams says that his membership has paid for itself 5 times over since he joined in late June. Man, that's awesome, man. I love to hear that. Thank you for letting us know. Brian, what's up, man? And Higher Low Crypto, welcome to the weekend. Yes, sir. Hey, listen, guys, if you want to join us, you can do so at howtotradetowin.com. And let's see here. I've got my 40% off for Tier 3 member for your first month of Tier 3. If you're a new member, you can get 40% off for that first month there, following that code there that I just put on there. This is going to end. We've had it for about a week now. This is going to end on Monday, guys. So if you haven't been a member and you're kind of thinking about it, jump on it by Monday. That way you can take advantage of that. Even if you only do it for 1 month, guys, there's so much education in there. Just be ready to soak it all up. You won't be able to get through it all, not in a month, but you can get through more than enough to make a significant impact as long as you're open and willing to learn on your whole trading there, guys. Over 110 hours of video educational content, 3 live streams a week for Tier 3. We teach you Wyckoff. We teach you Elliott Wave. We teach you rules-based systems and strategies and go in more in depth on other things to help you understand everything more. So great stuff, right? Let's see here. Oh, you're talking about the Ethereum USDT chart? Okay. Yeah, I think we can maybe do that. By the way, guys, I'm having a bit of a technical issue this morning. So I'm going to go ahead and this is going to be a shorter stream than usual. We'll probably be done in about 45 minutes. Right there around 11:45 to 12 o'clock or so, probably somewhere in there. And so yeah. So just to be aware of that, we'll try and get this done. Oh man, losing my train of thought here. Okay, guys, let's go ahead and get on this here. You do all that at howtotradetowin.com. Let's see here. We jump in here to Bitcoin, right? We can jump in on that, right? You guys don't mind? Man, look at that thing just running there. So, what do we got here, man? So we've got this coming up here. As I said, we had this top here, and everybody started freaking out at this top. We had a couple of different ways we were looking at this. It comes down to basically this this flat correction. There's 2 ways to look at it, as I told our members. You can look at it like I'm looking at it here, which has us. Let me see here. Oh, I moved this. Okay, yeah, that's what it was. I've got it here where we've got it finished up here, and then A down, B up, and then this ending diagonal is C here. You could also look at it basically as this 3, 4, and then 1, 2, 3, 4, 5. So then one ends over here, and you have ABC down, ABC up, and then 1, 2, 3, 4, 5 here. Either way, it was going to the same area. You can see it bounced right around the EQ of my demand structure here. Broke out of this descending channel, descending wedge, green wedge thing here. Gave us a pattern target of about 20, well, where it broke out, there was 47,750. That's the pattern target. I did let our members know that your earliest entry, a good place to do it would be right here on the breakout of this purple line. And so some of them jumped in there, and they got this nice, great big move up here. And so here we go, continuing up to, I've got an R1 pivot. Now, what we're looking at here is we've got a 1, 2, and then 1, 2, 3, 4, 5 gives us a 3 and a 4. And then right here we've got a 1, 2. And let me kind of zoom in here a bit. I'm looking, see, I was looking at the possibility of us being done. I think it might go beyond where we're looking, because I was looking at this a 1, 2, and then we had a 3 up here. This was the 2618. That was our target. That was this morning's target, if it continued up, and it did. This pullback was supposed to be wave 4, but I think it's just a 1, 2, 3, 4, 5. So I think we're still getting up here. This is just going to be this interior 1, 2, 3. We'll probably get a pullback to this area here right around, that 48, 280 kind of area. And then we'll get 5 on the breakup. I think that's probably what we're looking at now as we zoom into the 15-minute here. But that does look like a 1, 2, 3, 4, 5 finishing out. So pull back. So this becomes a 1, 2, 3. Pulls back probably to this area for a 4. Let's see. Let's see here. If we look at this. Yeah, if we get up around this R2 pivot on the 15-minute, excuse me, that 38.2 is right here around 48.180 or so. So a little bit above that. It should get caught up in this. There's nothing here to really catch it below it, so it should get caught up in this area here and then break back up. So depending on where that gets in there, that might get us a target up here around 49,670 maybe. Somewhere up in that area. But remember, this is wave 5 of the first wave set up here. So wave 5s are notoriously difficult because they can stop short, they can go long. They can do a lot of different things. And so they're difficult to trade for a lot of traders. What does that get us? See here. That would potentially get us up here. I'm just trying to see if there's anything over here this makes sense. Oh, yeah, look at that. Right into this supply structure right here on the 4-hour. So get you right up into that. So that's where I would think, at the rate it's looking right now, I think that's probably where we're headed. Let me just kind of get this set a little bit better here. Pull that over. So that'll give us a target range here of, let me see here. And the bottom of that supply structure is right there around 49,378. So between that and the EQ at 49,587, I think is probably, might end up being the target here, guys. The ultimate, the wave 1 target here. But at this point, guys, we've blown up and through on volume and large candle spread up through the pivot here. We've taken out the swing high. We should be heading up higher, up here probably around 59,200 or 61,450, right at one of those two levels right there. Minimum target right now. And that's just that larger wave 3 here. That's not the interior stuff here. But that's this larger wave 3. So, I mean, when it pulls back here, it should remain above the pivot. That shouldn't be an issue. Let's see. If we get this target up here, I mean, yeah, look right here. This cluster right here is where we should be looking to get back to. That's the 50% at 46,686, that area. That's where I would look for it to pull back on this local wave 2 here, this kind of, so this here. this, oh, what is it there? Parentheses 2. I can't even say it. We'll get all this out of the way here. And that should probably get us up here probably around, get rid of all this stuff here. Probably around this R3 pivot for the wave 3, I think. Probably be a good one. And that would give us a wave 5 then likely at the EQ of this range. Right up here at around 56,000, 56,100 minimum. But that's all predicated on this actually making it to the lower, the lower half of this supply structure and then pulling back here into this. It might even be more specifically, you might find a reversal right around this this demand block right here. This block of demand. That's right there around 46,830 to $47,050 or so. But yeah, that's what we're looking at. So upside, guys. Don't be scared of the downside right now. There's no reason to be. Let me see here. Chris Baker, what's up, man? He says, my account is paid in full till 2023 and was able to do that with what you've learned from TWC. Man, I love to hear that. That is so fantastic. Guys, I could sit here and tell you all day that, that what we do is good stuff here and that we've got the best membership, man, the best group of traders that you'll ever come across. Just absolutely kind people and just wonderful people. But, you have to come in and check it out yourself. I know I'm just a guy selling a thing, right? But, again, I keep telling you guys, our members on average stick around for a couple of years. We've got many members that have been with us since day one, almost 4 years ago. We'll have our 4-year anniversary next month. And they're still with us. And, they still pay. And so you have to ask yourself, is it really worth it? Well, would it be worth it? Would it not be worth it if, guess what I'm trying to say is, would they still be sticking around and paying if it wasn't worth it? I guess that's what I'm trying to say. But we're always adding new stuff, guys. Q4, we're going to have options coming out. We're going to do options trading and whatnot. I'm working on some partnerships with some other companies to get you guys more stuff, better stuff. I'm working on... a lot of you guys want to do this live trading thing. I'm working on a way that we can do that as well. So lots of stuff coming up at the end of this year. So hopefully you guys will join in, man. We'd love to have you there. Let me see here. 075, what's up? He says, the stock market, S&P 500, looks like it's going to crash sometime soon. Do you expect crypto to crash when this happens? Or do you expect crypto to grow stronger when that happens? So generally, your stock market, crypto, stuff like that, these are considered risk off, okay? Risk on. And so what that means is when there's a risk on environment in the economy, when everybody's feeling good, when everybody feels like things are going to continue up, that's when they all go up. But if the market begins to become concerned, it becomes a risk-off market. And so a risk-off market, all these risky assets, stocks, crypto, whatnot, are usually, money is taken out of them. Now, Bitcoin is obviously one of the riskiest assets out there, right? And I say that, you go, oh no, look, 10 years it's gone up, blah, blah, blah. Yeah, and I say, well, obviously, you haven't been in business too long. Because what we've had is Bitcoin has been in a bull market. The economy has been in the secular bull market since the great financial crisis, right there, that ended back there in 2009, right? And that's about the time that Bitcoin came out, 2009. It really started kind of making a little headway there in 2010. So we kind of look at that area. But, it was released in 2009, right? And so we've had just this bull market all this time. So everybody spouts off about what Bitcoin's going to do and how it's going to act and whatever, but not one of these people knows. Because it's never been in economic conditions where the economy's pulling back. It's never been in a recession or a depression. We don't know how Bitcoin's really going to act. The assumption is because it is a risky asset, a risk-on asset, that in those situations, it's going to pull back. It's going to, just like everything else, right? Or just like in general, everything else, right? And that's what you should expect. When the economy rolls off the cliff, everybody tries to protect themselves. I always get the question, when I talk about possible top for the stock market, well, where's the money going to go? Well, where does it go every time that the market tops? A lot of it's lost, right? A lot of value is lost. Remember, this is money on paper. If you've got money out there and the market's dropping, they're not going to keep sticking in the market. They're going to protect it. So bonds, stuff like that, you know. But I think it's kind of silly to often, to continue to say that. It's like, oh, well, where's the money going to go? We act like we've never been through a recession or a depression before. Where does the money go during those times? Same place, same places, same thing happening. So that's what I'm kind of thinking about it. If it does, we'll take a look at the stock market here in a minute. As I said at the beginning, there, Nasdaq looks like it's the worst one right now, but I think the Dow Jones may have another room for further upside, and S&P may as well. We'll have to see how they continue to play out. But yeah, Bitcoin. I think Bitcoin's got another quarter in it. I think it's got Q4 here, kind of like 2017 where we had that end. I think it's got at least that. I know Willie Woo's out there saying that he thinks there's going to be some extended bull market and we're going to go into next year. Possible. But I'm looking for the economy overall. I mean, there's so many signs. They've been building up over the past, 2 years. If you've been following me, all these signs have been showing up. And you say, oh, but it hasn't turned down yet, so you're wrong. No. We're talking about big 233-year cycle, guys. We're talking about a correction off of that. And so that's going to take a while to finish that top out. It's the credit bubble. It's the everything bubble. At some point, people go, I'm just not going to take out more credit. And remember, when you're in a debt-based economy, which is what we are, there has to be an expansion. There has to be an expansion of the money supply. There has to be an expansion of credit. Okay? And all that comes at the bank level. But what do we know? We know reverse repos hitting $1 trillion overnight every time now. And so what that's doing is all that money's being sucked into reverse repo. It pulls it out of the, pulls the liquidity out is what it's doing. Why are banks doing this rather than making loans? That, I keep pointing this out. This is what you have to think about. If the economy's doing so great, if everybody feels so well, why are the banks still putting more and more money into reverse repo rather than loans? All right, so you have to figure that out. It's a lot more difficult question than, oh, Powell's printing dollars, so hyperinflation nonsense. Guys, if you're thinking hyperinflation, by the way, please understand it's nonsense right now, anytime soon, here with the U.S. Okay, it really is. You really have to study monetary history, monetary economics, to kind of understand why that is. But there's no reason to really think that hyperinflation is coming anytime soon. Matter of fact, if you go to the St. Louis Fed site, Fred, if you go there and look at M2 money supply year over year, you'll see there's been a huge drop off since last year. So while overall there's more money, that was printed, year over year, it is pulled back significantly. So if your idea of hyperinflation is predicated on the fact that the Fed is continually printing more and more money, well, obviously, that puts a hole in your bubble right there, your reasoning. So, yeah. But, yeah, I think, by the way, guys, as far as Bitcoin goes, I don't know how to explain this. So, maybe I don't know how to explain it. You've got this, okay, so if the economy rolls over, it doesn't roll over overnight, okay? So remember, the prices of things are determined by the amount of demand and supply, right? And so even if the economy starts showing signs of rolling over, people may believe the narrative that Bitcoin's going to go up anyway. Bitcoin's not going to go up in a recession or depression. It makes no sense. People that have the money to do it, to keep it up here where it's at and put it higher, are not going to continue to put that money in a very risky asset during the times when the economy's rolling off a cliff. It makes no sense. They're going to protect their money. But it takes a little bit for the market to get enough supply participation to roll the market over. And so, we could see, stock markets topping out here over the next month or two and see Bitcoin for the next month or two after that still making higher highs to blow out and finish off because retail's going crazy thinking everything's going to be fine or trying to make their money for the next year, in the last month or two. And we could still see that. So, yeah, even if the economy starts to roll over, there's still the possibility that Bitcoin could still explode higher. But, of course, we still have to get above the 65,000 swing high there, all-time high from back in, April or so. As long as we're still below that, there's always the chance that could be the top. When we break out above that, now we've got further potential upside. But I would expect Q4 to be accelerated rise, accelerated rally. I don't right now at this point think that we're going to have a continued bull market into 2022, beyond like right there at the beginning, maybe January or something. I don't think it'll even be that. Bitcoin's had a penchant for doing its macro reversals in December lately. I mean, it could continue up, but I think right now I'm just planning on myself personally for the top to come in here in Q4. And as Q4 continues out, we'll see if it happens. It might give us more information that, hey, we can go look longer. But right now I think we've got Q4 at least. Let me see here. Any additional discount for students to learn? Well, we've got that 40% off right now. I'll tell you what. Shoot me a DM there. Let me see here. Let me get you the link. If you guys are students somewhere, maybe I can do something. Talk to me. Do this right here, guys. Click on this link. Join the free side of our Discord server, and then send me a DM over there, and I'll get to you sometime today. And we'll figure out what we can do, if we can do some, and how we would do that. I'm always willing to try and help everybody out, guys. Best I can, anyway. Let me see here. Let me see. Okay, so this is this. So again, it looks like we've got 1, 2, 3, 4, 5 coming up there. So we'll get a 3, 4, and then a 5 pulling up here. So again, target's looking where it is. Oh man, we're running 11:30 here. Okay, DXY guys. Looks like we're getting that top here in the R3 pivot on the 1 hour. I need to see a breakdown below this purple line here. This is 93.3. If we can do that, let me see here. Oh, there, I've already got it here. If we can do that, then we've got a wave 2 target. Man, that 38.2 looks really inviting for a reversal. You've got the previous resistance, previous support here. So I'd be looking initial target for wave 2 here right around 92.98. Give us a short wave 2 and then continue higher there. Don't forget, guys, we're getting near my target. So we've got two things going on here. We've got this possible longer-term double bottom going on here. Right here, potentially. And that'll get you up there into 97 based on the height of this here. That'll get you up there into the 97s. But I'm looking for my break above this swing high right here. This is my wave 4 on the way down. It's 94.739. Right up here. If we can get above that, to me that adds a lot of confidence to the possibility that the bottom may be in. It's only wave 4, so it's really just the first step, and we kind of really need to move above wave 2. But I'm feeling nice about that, getting above that wave 4 there. That's been my target off all this. Again, looking at the likely potential bottom here in January, the macro reversal there came up, hitting a double bottom here for a 1-2, breaking itself up there higher. So that's what I'm looking with that. It's been going up as expected, which means, we've been making money on those USD pairs, long in the USD, shorting the pair, shorting Euro, shorting Great British Pound, shorting the Aussie, shorting the yen, long in the dollar. It's turned out to be very profitable. Man, that USD CAD has been just it's been a monster. USD CAD here, look at that. So our breakout was down here. If you didn't get anything in the enter down here. So if you did that, you've potentially ridden this up for about 430 pips almost. Hit my supply structure EQ almost perfectly there. Looking for an initial target of this previous supply, now demand structure EQ right here at around 1.2807. This kind of area makes sense because there's that wave 4 right there. But, of course, it does not have to do that. You've got your 38.2 right here. It's just really nothing. I don't know. I could see maybe if we're going to drop on through that EQ, I'm going to look right here around the 38.2, 1.27656. There's this high volume node right here, which coincides with what has now become a demand structure right here. And I can see price popping into that and rallying back out of that. But this is only 4, and we'd have 5 still going up from that. So yeah, you've got great volume expansion on the breakout here. Nice candle spreads and at important points throughout it. You had a bit of bearish divergence right here toward the top between these waves 3 and 5 on this 1 hour. Stochc RSI is bottoming out and oversold here. So could be looking at an A and a B and a C still to come down. But yeah, it's just been an absolutely killer week with long in that USD CAD pair there. Let me see here. Hey there, TV Canal. Good to see you. Let me see here. A CME gap at 32,000. Guys, I haven't looked at the CME in a while, guys. Let me see here. Let me go with this one, I guess. Let's take a look at that real quick here. All right. Let me go ahead and take a look at that. Let's see what you're looking at here. Oh, Bitcoin futures. There we go. I don't know why I don't ever remember that. Wow, that looks impressive, doesn't it? You're saying a gap at 32,000? No, that's a breakaway gap. Not all gaps are created, guys. Are created equal, guys. This is called a breakaway gap. They rarely get filled. What these entail is that there's such strong demand comparative to supply that it just races on up. But even with this, is this coming after a weekend? Let me see, 23rd, 25th. Yeah. See, this is a breakout gap after a weekend. And the fact that we pulled back and just have continued up since then, I wouldn't even worry about it, really. I mean, could it come back down to it? Sure, it could, but usually I don't worry about those types of gaps. This is huge. You've got this big gap on the breakout of this range here. That's why it's called a breakaway gap or a breakout gap. And you've got all this strong volume and candle spread continuing up after it for the next few hours thereafter it. And it just, yeah, there's not a whole lot of reason to be too concerned about it, I don't think, personally. Looks like we've got this gap over here from December here as well. This weekend gap coming up during Christmas weekend here, which you're going to get. And then you got a gap right here. I mean, there's lots of daily gaps here. But also the fact that the gap happened on a weekend, guys, usually means that it doesn't make it a very strong candidate to get filled. In weekend gaps, if you don't fade them back, often price just continues up from it. Yeah, because it's a weekend thing. It's just it's just data that it's not having because the market's 24/7. And so but this market's only but this platform's only open. This particular market, the futures market here, is only open when it's open. But the market itself, the spot market, is open 24/7. So if your gaps are happening on weekends, It's not a strong candidate to get filled. They could, but it's really just not a strong candidate too. And then as we looked into it, as you saw, it was also a breakout gap, which again decreases the odds that it's going to get filled. So yeah. Yeah, lots of gaps, guys. But yeah, again, this is those things. This is why I keep trying to tell you guys. As new traders, you don't know what you don't know, and so all gaps are not created equal. You got breakaway gaps. You got weekend gaps. You got all these different kinds, and only some of them get filled regularly. Other ones generally don't get filled, and weekend gaps usually aren't a big reason to get filled, and of course breakaway gaps usually aren't either, especially when those breakaway gaps start near the bottom, start near the lows. So this was the low right here, and the breakaway's right here on this third wave, and that's where you'll often see these breakaway gaps on your third wave. So you've got this 1, 2, 3, 4, 5 here. So 1, 2, you're working up like this. So yeah. Just some things to understand about that. Sure. You'll fill it in the bear market. It really just depends. There's a lot. By the way, guys, that's a good comment there real quick. As far as Bitcoin goes, again, there's so much. Again, guys, I'm here. I'm not going to blow smoke up your rear ends. I'm here to kind of, be honest and upfront with y'all about it. Again, the reality is nobody knows what Bitcoin's going to do in a bear market. I know there's a lot of hope, and there's a lot of, it's going to do this and it's going to do that. And heaven forbid it actually does, because people would be beating their chests like they knew, and what it was, like there was some kind of guarantee in what they were saying. But there really isn't, guys. And as a trader, you have to really develop the skill, to hone that skill to where you can move beyond that, where you hear somebody talking like that and you go, they're talking out of their rear end. So depending on what goes on, here's what I'm thinking, guys. Normal bear market, if Bitcoin gets up to 180 or heaven forbid 360 or something like that, right? A normal bear market, there's no reason for us to see 32,000 again. Okay? There's just not. But if we're coming into this grand kind of recession or a depression era, end of the credit bubble, economy rolls over, deflationary spiral, turns into stagflation. So we're in this bear market for, years at least. In something like that, I could see Bitcoin actually returning. This is CME. Well, I could actually see it probably returning down here, to 1,000, 2,000 even, and something like that. Sure. But, and you're probably hearing that right now going, man, what the heck is that guy on? But, when you study markets for a while, and you kind of see what we're looking at here is all this euphoric secular bull market nonsense that we've had since the great financial crisis there, 13 years ago or whatever, 12 years ago. This kind of thing coming out at the end of some huge cycle, everything, all risky assets are going to be well overvalued. And you would expect to see a very, very large correction coming in, because you're like in terms of stocks of the indexes, you would be working on a super cycle there, pullback. And so same thing with Bitcoin. You'd be expecting a really, really huge, because Bitcoin's exceptionally risky. It's had multitudes returns since it came out, 12 years ago or whatever. So you would expect you should logically expect a very large return back down during that kind of period. So, we'll see what happens, right? I'm still long with mine. I don't see any reason to get out anytime right now. I've got some that I bought back in 2017, as you guys know, just sits there, getting bigger and bigger. And then you guys know, I add them basically every day. I've got buy-ins every day. So, $100 to $1,000 depending on the day. And so, my bias is to the upside right now, and I'm putting my money where my mouth is. But that's the investment side of it, and that could end at the top of this cycle. And I'm prepared if it does. But we'll see how things continue to play out. We'll see how the economy continues to play out and get a better idea for it. But, the musings, these thoughts that I give you right now they're just based on that right now. We don't have any other information at this time. Okay? So you guys need to make sure that you understand that. They could change as more information does become available. And look at that breakout there. So you've got this base channel coming off the bottom here. Wave 3 often breaks out, comes back, retests as wave 4, and you have a wave 5. So, I think, honestly, I think we're probably headed to 100,000. That'll get us up here on the monthly and the weekly R5 right up here. Pivot right there around 100,000 or so. But that doesn't mean we can't have some kind of blow off, huge 180,000 or more even at it. We'll just have to see how it plays out as it gets there over the next few months. But I think we're probably headed to at least 96, 103,000, somewhere right around there. Yeah. Let me see here. Yeah, so when it comes to like bear markets and stuff, guys, everything drops at first. Kind of like what you saw in March of 2020. Everything dropped. Stocks, gold, everything. The dollar's the only thing that rose, right? And that's what happens at the beginning. You saw it in, I've talked about it before, at 2008 when we had the drop for the great financial crisis. And I showed it there. And so that happens at first. Everything drops at first other than the dollar. Dollar is the safety. Everybody runs to the dollar. Why? Because, as everybody starts running, the dollar becomes more valuable. The countries still have to pay back their U.S. debt in dollars. So the longer they wait, the more they have to spend to get those dollars, which means their debt becomes more expensive. And so, everybody's a rush to get to dollars, and dollars shoot up, and everything else kind of drops down. But then before the end of the bear market, your risky assets start to pick up. Gold started a few months before it bottomed out in 2019, before the markets did in 2019. And we would expect the same thing for Bitcoin. As a matter of fact, I've said it before, I think there's a good possibility that Bitcoin might be the first of the risky assets to kind of find a bottom before the bear market's over with. If we have this large scale bear market. So I've got a lot of hope in that as well. But again, I'm looking at what's going on here as we run up in this next thing here, and I might go ahead and cash out my investments in Bitcoin, depending on what it looks like, depending on what the overall economy looks like. The last thing I want to do is write it down from $100,000 to $2,000 or something. That's significantly a big move down. So if that's showing a possibility we're going to have some huge thing like that, I'll likely cash out, and then I'll probably buy in back at the bottom, or somewhere there. I'll trade it down along the way, sure. Now I'm a really bad bear. Let me see here. Let's see here. So, I think we're kind of looking at that. I think we're getting probably, if we're going to have this big recession thing or depression type thing, I think we're probably coming to a head sooner rather than later. Q4 bleeding into Q1 maybe. If we're not doing it by then, I'm gonna have to look at what's going on. But I think things become really suspect about it. I think maybe we just continue up, which is really weird. Those of you that haven't been trading for any period of time, you don't understand how weird that March 2020 was. That drop there. In terms of markets, it was one of the harshest moves down in one of the shortest bear market of all time, and that's odd. And so when it comes to trading, if something is odd, you should pay attention to it. If something doesn't happen like it normally does, you should really be paying attention to it. And that's why you got people like myself and others out there who are talking about this possible, huge depression thing kind of coming in. And not everybody's looking at Elliott Wave. Other people are looking at other reasons for it. But, all coming to that same conclusion. So, yeah. Let me see here. So, we've looked at all that. Let me pull up here. So if we're looking at, see, do I have TLT on here? No. Let's look at bonds real quick here, guys. Let's see. Where are we at? I've got them in here somewhere. All right. So bonds, TLT, guys. As you can see here, following, my path up, what I expected, what I've been posting there in Discord for our members, for our Tier 3 members. It's trying to break out of this descending channel resistance here. If it does, you've got a pattern target of $5.74 above the point of breakout. Wave 3, circle 3 here, has a minimum expected target of 155.88. Guess what, guys? If TLT is rising, that means your market participants in stocks are getting more and more nervous. Because what they do is they rotate out of stocks into TLT, into bonds. Long-term government securities. This is as close to a guarantee as you can get on your wealth. Because as long as the government's still standing, TLT is going to, the TLT, well, TLT is the ETF for them, but your long-term government securities are going to make sure that your wealth is, is protected, right? So, again, the idea being that if TLT is running up, then that means the market's nervous about what's going on with, with stocks and whatever. And so it's continuing to go up. I mean, again, coming off the lows, we've been doing this since before we got to the lows here, right? We were watching this coming down. We got our low. We've got 5 up here. And then it's got a 2 on that. So, we've got a wave 3. The larger wave 3 here, 1, 2, 3, has a minimum of 178.07. Right there. And, I see people out here and they want to be fundamental. They want to go, well, bonds are doing this and treasuries are doing that. So why would this happen? And I think, again, with what's going on right now, there's a lot of stuff that doesn't normally happening at the same time here. And so, I think you spend too much time worrying about something that you may not really know a lot about instead of just looking at the chart. Just trade the chart. This is why I tell you guys, technical analysis is so much better than trying to be a fundamental analyst, because a fundamental analyst has to understand all this other stuff. Technical analyst, you just have to understand the system that you're using and how it works. Your validation levels, stuff like that. And so in that way, anybody can learn to trade technically, guys. Anybody can learn to trade the charts. Not everybody can learn to be a successful fundamental analyst because there's so much other stuff you have to learn along the way. And then there's a lot of ambiguity in that stuff, especially when you get to things like right now. And so why are things happening different now? Because, again, credit bubble, everything bubble. And so, you got QE in there. All this stuff distorting risk and everything else. So, yeah, and the market's not sure what to make of it. The market's flush with cash. It wants to put it somewhere. But at the same time, you're seeing a lot of warning signs. So, yeah. How long will the bull market take or the bear market take for Bitcoin? I can't even tell you right now, honestly. If we were to have the kind of depression I'm thinking about, it's going to be a while. It's going to be a while. But probably a few years. But, you'll be able to still trade Bitcoin up and down. It's not going to make, overall significant moves up, for a while. In relation to where it's been, that is. So, but if I'm wrong about, this big, huge kind of depression thing coming, and I could be wrong. I'm telling you guys, I could be wrong. I don't think I am, but I could be. And if I am, then it'd just be a normal bear market for Bitcoin. And if I'm wrong, Willy Woo might be right, and we might have this continuation of the Bitcoin bull market into, next year sometime. And I would be okay with that. I'll be honest with you guys. I'm okay with that. I'm okay with being wrong with that. Why? Because I've got my investments in Bitcoin. Let it ride up, man. If that thing wants to keep on going up to 500,000 or 600,000, something silly like that, man, by all means, please do. I got some property I'm looking at. But again, I'm going to be cautious about it because there are a lot of other things I'm looking at, and a lot of it doesn't make sense to continue up. Most of it doesn't right now. Beyond kind of the whole top thing coming in, But we'll see. We'll see how it does, guys. You said you're talking about the next market cycle. About the bear market? The next bear market cycle? How long is it going to last, or how long is it going to take to get there? Your question sounds like it's asking how long is it going to last. But let me know which one you're talking about, and I'll, if it's the other one, I'll try and answer that too. Yeah, if it's a normal bear market, if we push to 100K, then 30K should hold up, sure. But again, if this is going to be a larger, not just a simple pullback that we've had, this is going to be a larger bear market. Again, think of the idea that maybe we're done 5 waves up. This cycle, maybe this is the 5th wave up. And if so, we've got a huge pullback off those 5 waves, off the last 12 years of rally. And so we could see a much lower target coming in. So we'll have to see. Yes, I'm sorry, QDX. I gave you 2 choices. I don't know which one you're saying yes to. You guys, when you guys ask me questions, try to be as specific as possible. Otherwise, I'm going to be clueless. And Lord knows I'm clueless a lot. So I appreciate that help. Any favorite podcast for studying the macro perspective of massive contractions, books, etc.? Gosh, it's like I don't have much time to do all that stuff. I know podcasts are a big thing for a lot of younger people these days. I just haven't been able to get into them. So if somebody else has a good podcast, maybe they'll pop it in there. But I honestly don't have anything that I listen to on a regular basis. I'll tell you what, Ace and Risk, you're in there in Discord with us. I'll look this weekend over some stuff, and I'll see if I can't come up with a few suggestions for you. I don't have anything off the top of my head that I listen to, or that people have that I, trust have said, it's good stuff. So I'll maybe do a little research this weekend, see if I can get you something. You got the answer? Cue the action. Okay, all right. Sorry about the difficulty there. It's the great part of what we're doing here, right? But anyway, guys, yeah. So we're looking for this to continue higher, which means the markets, should be a little bit of an issue there. I'm going to get ready to go here, guys, but let me see here. I've got the Nasdaq here. So Nasdaq, I'm kind of looking at this as possibly. Oh, I was thinking the Nasdaq. No. The Nasdaq, I'm thinking may have another move up. I had it backwards there. So maybe a flat correction here. We've got this breakout, which appears to be working on the 3rd wave here. 1, 2, 3. And then 1, 2, 3, 4, working on the 5th wave of that 3rd wave. But it's looking like that bottom may be in on that. The 3rd wave, we've got a 1618 up here of the pivot area right there around 14,794. But we're right around the 1-to-1. So if we're popping up a little bit above this S1 pivot here on the 1 hour, and then we reverse back on down below this swing low right here at 14,476. So if we kind of do that and come back below that, we should be looking for lower. If we drop below wave 4 here at 14,178, then that's a pretty good clue that the top is probably in on that there. But we'll see how that plays out. Right now we've got to break out through this descending wedge. And so it's looking pretty good up here toward a minimum target of 14,968 and secondary target of 15,142 as far as the Nasdaq goes. So hey Peter, my course is not so much a course. It started out as a course when I first started this like 4 years ago. But I've added so much to it that now it's just an informational resource. So we have about what I had as the course, I guess you could say. I've added a little bit to it since I released it, but it's about 14 hours, I think. But the real benefit of what you get is all that other stuff that we do every week. where we show you how to use Elliott Wave, how to use Wyckoff, how to go from theory to application, trend-based or rules-based strategies, stuff like that. That's where the real gold is. The other part is just, here's the basics. It starts from the basics of why markets move like they do, and then the importance of risk management and how to do it properly. And then we go on to, here's these indicators, here's how you use them, here's how you use them together or separately. Here's some price action patterns, some candlestick patterns. Here's the basics of Elliott Wave. Here's the basics of Wyckoff, stuff like that. But the other stuff we do weekly with Tier 3 is where the gold's really at. That's all the application consistently. Hope you get into that. Yeah. Self-paced, yeah, you can do it as quick or as long as you want. Like I said, you're not going to get through everything that we've got in a month, but you can get through enough of it to really make a difference with your trading if all you had, if all you thought you wanted to do was a month. As long as you put your mind into it and actually get, sit down and do it. So, yeah. But, yeah, so there's the Nasdaq, the Dow Jones here real quick. I've got an ascending wedge going on here. It looks like we've probably got 4 and we got 5. So like the Nasdaq, I was backwards when I was talking earlier, but like the Nasdaq, the Dow Jones looks like it's probably got one more leg up toward this ascending wedge resistance. So coming off of the high here on the 16th of July and then the low here on the 19th of July to build that wedge. And then the SPX here, the E-minis here, S&P E-minis. That was the one that looked like it was done. Possible leading diagonal here. Possible. But price cannot get above this swing high, this wave 2 here at 44.49 and 75 cents. If it gets above there, then I think this is potentially just an ABC. And we've got a 5th wave up still to go. So again, they could all be saying, hey, we've got one more all-time high still to go. That could take a month, potentially, or depending on how far it goes, a few months even. So we'll continue watching as it does. But if it reverses prior to that wave 2 swing high and drops down below this wave B here at 43.71 and 75 cents, then I'd be looking for probably lower down as a wave 5, as a, leading diagonal here. So, yeah. So there you go, guys. So I need to get out of here. Like I said, it's going to be a short one here today. As always, I appreciate you guys showing up. Love to have the conversations with y'all and answer your questions and do the best I can. At the end of the day, guys, I'm just here to tell you what I know from doing this as long as I've been doing it. And, hoping that you guys are open and willing to listen. And even if not, hopefully you come back and eventually you become more open to listen. Because... you can do trading. Anybody can do trading, guys. But you have to get out of your own head. You have to get away from the stuff that holds you back, which is usually stuff within you. Other than that, it's just understanding that, like any other skill, it takes practice. It takes time to get better at. You're not going to do it overnight. You're not going to do it in a month. Some people it takes longer than others, but you can get it. That's why risk management is so important. It makes sure that you have money still sitting in your capital account when you finally get it, when you finally get profitable consistently. But, most new traders don't pay a whole lot of attention to that. They go in guns blazing, thinking what they think they know, not being humble enough to understand that they likely don't understand what's going on. And so their minds aren't open, and just end up losing everything within 3 months and blame everybody and their grandmother on it, not themselves. So let's get y'all away from that, okay? Hey, listen, I hope you guys have a amazing weekend. Like I said, you can join us at howtotradetowin.com. Scroll back to the beginning of the this session here, and I've got that 40% off your first month of Tier 3 access there for you guys to join in if you haven't joined us before and to get a taste of what we do, man. Enjoy it. Other than that, as always, remember, the only thing you control in the market is how much you lose. So keep on working on risk management more than anything else, guys, all right? Y'all have a great weekend, and I will be back live on Tuesday, 11 a.m. Central Standard Time. Hopefully you guys will be there. Take care, guys.